Good morning everyone, I'm Ken, financial analyst from Regain Capital, and welcome to our morning market briefing on the 29th of October, Thursday. So as usual in our market briefing, we will cover three parts, namely the fundamentals, news release, and the technical analysis. So without further ado, let's start off with the fundamentals. When we take a look at yesterday's market movement, we can see gold falling by 1.6%, the euro fell against the dollar as much as 0.42%, the dollar index climbed higher by 0.37%, and oil plunging by 4.12%. So let's get into further details with the headlines of today. First off, let's discuss about oil's plunge, where we can see crude oil price has plunged below $38 per barrel on Wednesday to almost a month low following a change in market sentiment. Now previously we have covered that the oil price has been saved by the recent hurricane near Louisiana, which has actually halted a few of the oil refineries and providing some support for oil prices on Tuesday. However, as the pandemic surges, certain countries such as France and Germany were forced to reimpose lockdown measures, which has threatened the overall economic recovery not only in the European area but also globally, and further jeopardizing demand for the oil as well. Now furthermore, rising inventories levels as seen in the Energy Information Administration reports are signaling a ramp up in US oil production, causing investors to further sell off the oil. So we can see that the bearish pressure on the oil has been added due to the recent resurgence in the COVID-19. So in order for oil prices to recover back to a healthy level, it would require an effective vaccine. So instruments involved here would be crude oil itself and the Canadian dollar, where Canada's economy depends highly on the prices of crude oil. So moving on, let's talk about the dollar, where the dollar index surged on Wednesday following a fresh wave of the COVID-19 infections that triggered a few countries to reimpose lockdown measures. Now previously, London and Spain had reimposed lockdown measures in order to curb the recent second or the third wave of the coronavirus, and now two of Europe's largest economy, namely Germany and France, had announced new lockdown measures to curb the recent resurgence of the virus, threatening overall the economic recovery of the European Union. Now we can see that market conditions are mirroring much pattern, where the pandemic uncertainties had caused investors to seek shelter in the world's reserve currency. So whether or not dollar index is able to climb back to its highest level in March, it all depends on the progress of the pandemic and also next week's US presidential election. So instruments involved here would be dollar index and also major currency pairing against the dollar. So that's all for the fundamentals. Moving on, let's take a look at the news release we have for today. So please take note, time stated here are at GMT plus 8. So the first data would be the Bank of Japan monetary policy statement and also its interest rate decision at 11 AM, followed by a press conference half an hour later. So investors can actually look towards one of the safest country in the world, where their currency, the Japanese yen, is also considered safe haven, to see how the comments and also the outlook for the economic progression in Japan is doing. And also investors can also focus on the press conference to obtain further message on how the central bank would actually provide further support for its economic recovery. And at 8:30, US will be releasing its third quarter gross domestic product, where it is expected to improve from the second quarter, where it has plunged by 31.4%, and now economists are expecting a rise in its GDP by up to 31% for the third quarter of 2020. So any reading higher than the forecasted value would actually provide further support for the dollar. At 8:45, the European Central Bank will publish its monetary policy statement and also its main refinancing rate, where the rate is expected to remain same at record low. However, what investors will focus on would be the content of the policy statement and also the press conference at 9:30 led by President Christine Lagarde. So overall, investors will focus more on the speech from the ECB to obtain a clear outlook on the overall European Union's economic progression and its recovery, and certainly to address the recent resurgence of the COVID-19 and what actions to be taken, since some of the countries in the European Union had already announced new lockdown measures. So that is all for the news release we have today. Moving on would be the technical analysis. So here's an overview of instruments to be covered. First off, GBP US dollar H4 chart is still showing an uptrend. For the euro against the Canadian dollar, H4 chart showing an uptrend as well. For the US dollar Japanese yen, H4 chart showing a downtrend, whereas for the oil in its H4 chart still within a sideways channel. So let's take a look at the chart analysis, starting with the pound. So constructing the Fibonacci from the previous high towards the low, we can see that the pair yesterday has attempted to break below the 38.2 Fibonacci near 1.2980. However, had later on found some support, rebounded back towards the 38.2 level. Now MACD, although in a bearish momentum, however, we can see that overall bearish momentum is weakening, and we can also construct an overall upward channel for the pair where it remains traded. A false breakout happened yesterday and had rebounded, so overall we can still expect an upward momentum for the GBP US dollar. However, as of now, cautious investors should wait for further confirmation whether it is the breakout below the 38.2 again or above the 50.0 Fibonacci near 1.3080 before entering into the market. However, aggressive investors can consider entering into a long positions following yesterday's false breakout, leaving a long shadow at the bottom at 1.2990. Stop loss can be placed 40 pips from the level at 1.2950, and a take profit targeted all the way to its 50.0 Fibonacci at 1.3080. Next, for the euro against the Canadian dollar, constructing the Fibonacci from the high towards the low reach over here in terms of its shadow, and also we can see a resistance zone somewhere near 1.5660, and we can see that the pair is currently testing towards the resistance level. MACD showing a bullish momentum, suggests the pair to extend higher after successfully breaking above the resistance level at 1.5660. Therefore, cautious investors are advised to consider long positions after the breakout. Stop loss should be placed 30 pips from the level at 1.5630, and a take profit can be targeted all the way to its 100.0 Fibonacci near 1.5730. Whereas for aggressive investors, if the pair fails to break above the resistance level, aggressive investors can consider short positions at the current level. Stop loss and take profit should be placed at 30 and 50 pips respectively. Next, for the US dollar Japanese yen, constructing the Fibonacci from the shadow over here to the bottom shadow, we can see that yesterday's trading overall for the pair remains bearish, following the breakout below the 23.6 Fibonacci and also a previous support covered at 104.4. However, currently if we're taking a look at the MACD, is moving towards a bullish momentum, forming a golden crossover, and also a positive divergence can be constructed where we can see momentum building higher, however price are falling lower. So we can expect a technical correction for the pair towards the upside. So aggressive investors can consider entering into long positions at the current level 104.4. Stop loss should be placed 30 pips from the level at 104.1, and a take profit 60 pips from the level all the way to its 105 or close to the 38.2 Fibonacci. Whereas for cautious investors, you are advised to follow the trend. In terms of the daily chart, the pair is still being traded within a strong downtrend. Thus, we will wait for a breakout below the 0.0 Fibonacci or the 104 before entering into short positions for the US dollar Japanese yen. Lastly, for the oil in the stage 4 chart. Now, again, we are covering for a sideways channel in the oil, where we can see upper bound would be at 41.5, lower bound at 36.5, and also a middle point at 39.3. So overall, previously we have covered a short positions from the top level of the channel, and is currently moving. Price action is currently obeying all the way back towards the bottom level as it reaches the lowest level at 37 on yesterday, which is also the previous lowest level reached in the early of the month. And currently it is showing signs of a rebound. MACD signaling a diminishing bearish momentum. However, as market fundamentals we covered just now is signaling a strong bearish pressure for the oil market, cautious investors should wait for the breakout below the 36.5 before entering into short positions for the oil. Whereas for aggressive investors, you can consider entering into long positions if you're a risk taker, hoping that the commodity will still obey the movement within the sideways channel and rebound back towards at least the middle point at 39.3. So aggressive investors can consider long positions at the current level 37.7. Stop loss should be placed 50 pips from the level at 37.2 and a take profit 100 pips at 38.7. So that is all for our market briefing. Please remember to follow us on our social media such as Facebook, Telegram, Twitter, as well as Instagram, and feel free to drop by our website at www.regaincapital.com to get updated on all the latest market news as well as education posts for our clients. So thank you all for listening. We'll see you next time on our market briefing, and happy trading to all.